Hello, everyone. It looks like we're live. Let me know if you can hear me and see me well. Yeah. Let's see. I think there's quite a few. There's quite a few of you already. Hello, everyone. It looks like we're live. Let me know if you can hear me and see me well. Yeah. Let's. Okay. So who have we got? Endurorama says hi, everyone. Jen, the Liberty Lion asks, would you say we are moving into a commodities-based market system? Not necessarily. I just think commodities are going to become more important. They're going to make up a bigger part of the whole system, only because paper assets financialization has mushroomed so much since early 1981. And I think we're already seeing the unraveling, the switch from paper to commodities. So it's not necessarily that there's going to be a system. It's just that that real things are going to become more important. It's not just going to be based on debt and speculation and leverage. Jake's Custom Parts. Hi, Jake. Nice to see you. Andy says, I'm patiently waiting while we're here now. Des Smith, I got it one piece at a time. Olivier Leroy, good evening from Paris, 21 degrees here. Yeah, today is a beautiful day here in England, in London. Yeah, I think it was as high as 26, so it felt like summer. Let's see, Rumpelstiltskin, Rafi saying yen is toast, but weak yen will lead to US firms buying Japanese companies. I made a video actually this morning, Rumpelstiltskin. I usually don't do a video on Sunday. I do the live stream, but I didn't do one yesterday, so I felt like I was going to do one today. And I spoke about the currency scoreboard since 1971 when Nixon closed the gold window. And actually, the dollar is down about 55% versus the yen since then. So it's all relative, but I think, yeah, the weaker yen. I think it's. I'm not sure if it will last that long, because maybe the Bank of Japan needs to do a bit more tightening. But I saw that they announced they're going to buy a couple of $1 billion of bonds, so it's just going to keep the Ponzi going. But eventually they'll have, I think yields in Japan are going to keep going higher, especially the 10-year. As for Japanese companies, US firms buying Japanese companies, I'm not too sure. Really can't comment on that. Our Elkas, 1248 Pacific. Jeff McCarthy says, hit like. Joseph says, shalom, Mario. Time to do the hokey pokey. Mario and Robinson, Mario and Rudy. Well, Rudy's not here in the room. He's in his bed, actually, in the living room. So he, I just left him there. He's doing well. Manic Miner says, good evening, Mario. Hope you are keeping well. I am. Yeah, we went out for lunch today. My wife and I, we went to the golf club. I still can't play golf because I have to rest for my eye. My eye is doing well, but hopefully in a week's time, I can start playing golf again. Jesse Cabasa says, good evening, Mario. Joshua Porter, Jillian B. Hi, Mario. Can hear you loud and clear. I'm just going through I'm a bit delayed. There's so many of you. I just want to make sure I go through all of your greetings. Brendan Baker. Good evening, Brandon. Fox Moongaze. Rafi and Phil are also live right now. Well, there you go. Yeah, I'm on my own today. Last week I had Clive Thompson on doing the live stream, but he was also on Thursday, I think. No, that was Rafi. But anyway, so I thought I'd do one on my own today. No Rudy. Yeah, Rudy's all right though. Frickendale Special says good day, stackers and friends. Andrew Watson, he's in Basingstoke. Is there any treasury left? Well, it's a debtory, isn't it? There's no, I don't think there's much gold in that treasury. And if there is, a lot of it is encumbered, has been leased out many times over. Daughter of Patriots from Pennsylvania. Can you practice putting? Wow, I'm just, yeah, sometimes I do practice my swing inside, but yeah, right now it doesn't really matter too much anyway. It's almost, the season's almost over. Not that I'm not going to play during the winter. You can play here all year round. Hannah says, did you enjoy the Ryder Cup? Yeah, I watched it on and off because I went out for lunch with my wife. But yeah, the Europeans won quite easily, I would say. It got a little close at the end, but the thing about the Ryder Cup, I like the matches, the golf, but I think the crowds are getting a little bit too much. I mean, I'm older, of course. I remember 30 years ago, it used to be a more behaved event. I think there's too much. Yeah, it's a little people, booing, I think, is wrong. Booing the visiting side is wrong. Yeah, I don't think that's good. When players come up and the crowd start booing at them, you should not do that in golf. But anyway, Frickendale Special says, good evening. Lord Humongous misses Billy. I miss Billy too. And I've got actually a mug here. The Billy says, snore on and keep stacking. Billy mug. Yeah, I'm gonna have a sip of my water. Sandwich King from South Carolina. Hello, Sandwich King. Spock 2024. Pennsylvania Uber Alice. Yeah. David Evans, public time-backed currency of US for by US, and in US we trust ourselves to govern ourselves. I'm not, yeah, that's not sure what you mean by that. Anyway, Rafi is about done with his live. Ben Gray, hi Ben. So yeah, I'll wait a couple of more minutes and we'll go into the topic. The topic is about the bond market. What's the title again? Big cracks starting to show in the Treasury market. And yeah, that's what we're going to talk a bit about today. The reason I have always like a title and a topic is, yeah, to get people to come and watch. Of course, if you just say Sunday live stream, it's nothing really interesting, but it doesn't mean we can't do a lot of Q&A. That would be that's fine. That's what I'm here for on Sundays. I try to answer a lot of questions in the comment section, but sometimes it's difficult to answer all of them. John Titus had good video about future price inflation coming. Normal. Yeah, I like John Titus. He doesn't make videos very often, but when he does, they're good. And I interviewed him back in February this year, before the banking situation unraveled, and he forecast that really well, because I think he was one of the first ones to look at the FDIC losses from the third quarter report for 2022. We're going to get that report for the third quarter in November this year, in about a month's time. Civil society is long gone. I agree, Xander's eyes. Andrew Brown, good evening, Mary. Greetings from the Scottish borders. Over here, did you get a certain kind of historical excitement when you purchased your 1891 Carson City Morgan Silver Dollar, part of the Wild West history? Yeah, I mean, I have a Carson City also. I have some a Carson City $20 gold piece. Yeah, they're interesting. I think one that I should get is like New Orleans Mint. It has an O on it. But I also bought Ethelred the Unready. He was a king, a Saxon king from around 1000 AD. I think he was the last king. Maybe I could be wrong, before William the Conqueror came over. I got a silver penny from Ethelred the Unready. I thought that was historic as well, 1,000-year-old coin. Ibrahim Kuyumu. He was at he came to Coinex. Yeah, it was nice to meet you, Ibrahim. Lord Humongous will not eat V-Bugs. Okay, so Scott 49-140 just finished reading What Has Government Done to Our Money. I was confused about the part where he talks about exchange rates. I find them a bit hard to understand. Well, I guess an exchange rate is just a ratio between two commodities. I'll give you 2 bananas for an apple or whatever. I'll give you a dozen eggs for a silver dime. And it's just the exchange rate, like the old silver coins from different countries. They had different exchange rates only because sometimes they have different weights and different nominal face values. That's all it is. Acorn from Melbourne, Australia. Yeah, he's getting up early on Monday in Melbourne. Lord Humongous says Carson City is the most valuable mint mark. Yeah, The Great Taking is an interesting book, Urban Sombrero says. So let's talk about the Treasury market, because I think it's really important. And I think just looking at, just looking at the dollar and how it's doing, especially the dollar index, I think it's kind of a bit of the distraction right now, especially with what's going on with the Treasury market. And why is that? Well, because our current fiat currency system is backed by debt. It's a debt-based system. It's not a system that's backed by real money. It's not backed by gold or silver. And that's why, of course, the debt has gotten so much out of hand, because, to keep the debt, the system going, you have to always keep increasing the debts. And so the system, the base of the system is backed by the government debt, not just in the US, but in all other countries. That's why the European sovereign debt crisis back in 2011, 2012 would have brought the euro down, would have brought many countries down, almost brought Greece down. They had to come in and print trillions. Mario Draghi said, we'll do whatever it takes. So ever since 1981, this debt-based system has flourished because we were in a bull market in bonds. Yields kept going lower and lower. Yes, we had yields spiking a few times, but the trend was down. So, and basically in terms of price, when bond prices went down, people bought the dips. But now I think it's the other way around. But the problem is that regulators, they force pension funds, they forced other investors that they force them to buy bonds, especially Treasury bonds, because they say, oh, that's the risk-free rate, risk-free asset. And they still have this 60-40 mentality of 60% in stocks, 40% in bonds. And 2022, of course, is a really bad year for bonds and stocks. I think it was the worst year maybe since the 30s or something like that. But the problem that we have now is when rates went to zero, and in some countries they went into negative, prices of bonds soared. But now that we're going the other way, and I've talked about this many times in the past, it's going to be really bad. And this story here talks about sub 50-cent price on Treasury bonds, underscores investors' pain. And this story was out about, a couple of weeks ago on Bloomberg. And it says long-term bonds sold during pandemic hit hard as rates soar. Positive convexity means that could be valuable if yields fall. Well, that's true, but I think yields are going to continue to rise. So, for example, this bond that was issued in 2020, a 30-year bond, and it's due here, as you see, in 2050, it traded below 50. And that was, I think, with the yield around 4.4%. And now the 30-year yield is at 4.77. So this is going to get worse and worse, in my opinion. And what it does, and we saw this happening back in earlier in the year, a lot of banks, of course, they hold treasuries, they hold other bonds as assets. So you put your money, your currency in the banks. They take that. They don't put the cash in the vaults. I've spoken about this. They only keep like 0.5 cent on average in cash in the vaults. The rest they lend it out. And lending out is the same thing as buying a bond. But the thing is, with the value of bonds dropping like they are, and even treasuries, of course, the government can always print and pay it back. But when you have very long-term treasuries like that, your balance sheet has a big hole. And that's why SVB went under, because depositors got spooked. And yes, the regulator a few years ago said that these losses on treasuries are held to maturity, so it doesn't affect. But people get worried, and that's what happened in March 2023, earlier this year. And I think it could get worse. And I saw that Jamie Dimon even thinks that the yields could go up to 7%. And I don't disagree with him. And I even saw Larry Fink being interviewed recently, and he said he thinks it's going to go to 5 to 5.5. But I tend to agree more with Jamie Dimon. And can you? I think the Treasury, that 30-year bond in 2020, they issued it in May. It was 70 billion. So now it's worth half of it. But I'm going to show you here, if I can find this. I'm going to share it with you in a second. Okay. Let's share this chart. This is and some of you have been following me for a while, of course. Maybe you remember earlier this year I said that bond yields are going to go to unimaginable levels. And am I trying to say, oh, I told you so, I got it right? Well, it was like an educated, or it was a probability that I thought was pretty good, because we had this move up here from March 2020, from just around 1% in the 30-year yield, all the way up to like 4.4 or 4.25 last year, 2022. And then I saw that we were consolidating, but I thought we would break out of this triangle, and we have. And look where we are now, at 4.7. And what you do in this technical analysis, you basically clone this move here, and you move it from the breakout of this. And I get like almost 7.25% by 2026. Can you imagine? That would mean, I think, 30-year mortgage rates above 9 or even 10%. That would be really bad. People need to understand that bonds are more important than stocks, and bonds are at the base of a lot of stuff, the whole financial system. Of course, below bonds are cash and then gold. That's the old John Exter pyramid, right? So I'm going to stop right here now, and you guys can ask questions. And I think people are very complacent, the market overall, and investors about the bond market, because most people just follow stocks. And stocks, yeah, they have come off a little bit. They had the worst month in a while, but it's not really that bad, right? So I'll stop here and take some of your questions. Joshua Porter, Charles Nenner says the cycle for precious metals is down next year. What do you say? Do you follow cycles like that? He's in 2-year treasuries, I think. Well, you know, Charles Nenner, yeah, he's an interesting guy. He does change things though, but why would I go? I wouldn't want to be in 2-year treasuries, because I think it's a matter of principle. Would I want to lend money to Uncle Sam, to the deep state? Because that's what you're doing. So I would never, yeah, I would never put my money, well, maybe in the past I would have, but from what I know about the system. But Charles Nenner was also saying earlier this year that gold was going to go to 2,500. So I'm not so sure. You know, it could be a down cycle next year, but from what level? You know, we could still go higher and then go down and still be above where we are. I'm not concerned because, yeah, I can't see the system holding up, especially with what's happening in longer term treasuries. And I'm not even sure I'd like to hold 2-year treasuries. Yes, they're not as susceptible to convexity, which is basically the price moving a lot. The longer term treasuries prices go up and down a lot more. 2-year, not as much. If I was to lend money to the government, i.e. buy treasuries, in this current environment, I wouldn't even touch the 2-year. I would stay in like the short-term bills up to a year. Yeah, because then you can, and I think yields are going to keep going higher, even for the short end. And I think inflation is going to stay elevated. You can always like roll over at higher rates, but with the 2-year, I think it's too long, I think. Jeff McCarthy, thank you for your super chat. What's TLT? Well, TLT is a derivative. It's a derivative or an ETF that tries to mirror long-term treasuries, and it has an average of 20 years. So it's an ETF. It's not a real treasury, but nowadays everyone wants to do everything conveniently and not the real thing. It's the same thing with gold and silver ETFs. So you're not really buying treasuries through TLT. You're just having exposure to the price. So, but it could be easier sometimes for small investors because sometimes the bond market is reserved a lot for wealthier investors and big institutions. Alan Roy, is the bond market the driver to the stock market? Of course it is. That's where the price of credit and the discount rate for stocks is determined. And that's why I think investors are complacent because this could be really, I think the stock market is highly overbought, seeing that bond yields are still really high. And there's a lot of people out there who are saying, oh, it's normal that bond yields are going up because the Fed is being hawkish. But I have to say, late last year and early this year, everyone was saying, oh, we're going to see bond yields go back down, and they haven't, and they're going to keep going up. Yeah, they're very important. And the other thing about the bond markets and interest rates is that derivatives, okay, we have derivatives on the stock market, on commodities, but also on bonds. And the biggest chunk of derivatives, proportionally, 2/3 of all derivatives are on government bonds, interest rates. And yeah, I think it's very significant. That's why I think there are cracks in the system, and very few people are seeing it. How it's going to play out is difficult to say. Over here, how can they continue to suppress gold and silver prices? Well, they do it through the derivatives market, through the futures, through the LBMA, which a lot of it is not really, it's unallocated gold. They lease it many times over, but they can't do it forever. You know, the Eastern central banks like Singapore Monetary Authority just bought a lot of gold. And I said this morning in my video that a lot of the times people look at gold as a speculation. You know, they want to buy gold to make fiat currency. And that's the whole problem. You need to look at gold as a long-term savings instrument that, you know, it will always gain value relative to fiat currency, because fiat currency, central bankers and politicians, they never like deflate things. They always keep inflating it. Yeah, chill. Yeah, derivatives and futures. Well, futures are derivative. What you have, it's like a bet on an underlying asset. But the thing about the interest rates derivatives or bond derivatives, a lot of them are over the counter. Not all of them are on the exchange, and it's very opaque, the over the counter derivatives, because it's contracts between two counterparties privately. So yeah, it could be really bad. Over here, how bad does the Christmas holiday season look? I don't know. I don't know really. I mean, we'll have to see. It's still a little bit early for that. But I don't think it's going to be great anywhere really. I think I spoke this past week about the fact that the yield curve is steepening again, and that usually forecasts a recession. And I think the bottom 80% of Americans have run out of savings. You know, borrowing is going to be more expensive now. You know, mortgage rates are going up, credit card rates are going up. And I think they're also like stopping the student loan forgiveness that they've had since the pandemic. So if I had to guess, it's probably not going to be a great Christmas for the retailers. HR says, good morning from Australia. Calder Park says, is British gold Britannia's and sovereigns? Yeah, I mean, they are minted in the UK, the Britannias and the sovereigns. Britannia is usually a 1 ounce gold coin. Sovereign is about 0.2354 of an ounce. Chill says, my local coin shop told me Someone inherited $1.2 million in gold. They promptly sold it all. They just sold their generational wealth in the blink of an eye. Yeah, I think that's a big mistake. Exchange real money for debt. That's what this person did. He might have want to exchange some of it, maybe if he needed to buy a house or something, but I wouldn't have, well, I definitely wouldn't have done that. It's probably because the person who inherited that had no clue what gold really is. Daniel Sass says innovation is driving the new economy. Uh, well, it does always, I guess, innovation, but I think we've come to a point where we have, yeah, things will improve, but all it's always tech and tech and tech innovation. And I think if you go back, I'm old enough to remember the 80s and 90s. I think a lot of things that we had in the 80s and 90s were a lot better. Like when you used to fly, uh, you used to get better food, more leg room. You didn't have to get searched at airports. And yeah, it was much more comfortable flying and traveling. What else? There are a lot of things, of course, that have, I couldn't have done what I do now back then, but I don't necessarily think it's always the end all, innovation. Yeah, it's just me tonight, insane or what? It's just me. LG says TLT is not a derivative, it's an ETF. No, it is a derivative. It is a derivative because it's not the real treasuries. It's a basket. So there you go. You're not actually owning the bonds. It's the people who issue the TLT who own it for you, and they package it into something called TLT. TLT is a promise. So that's why it's a derivative. An ETF is a derivative. It's not the real thing. Alan Greenspan knows what gold really is. Well, he does. He does. And it's a shame that he became chairman of the Federal Reserve or went to work for the dark side. LG says buying TLT is easier and faster than buying the actual bond, which you can through the broker account. That's right, but that's what I said. People nowadays don't want to, they're too lazy and they want everything easy, but you're not buying real bonds by buying TLT. It's like gold. You're not buying real gold if you buy an ETF. The only way you buy real gold is by buying gold. And that's the whole problem with this whole fiat Ponzi scheme. No one everything is fake. Even the food now is fake. So that's the problem. Anyway, I'm not interested in buying bonds because I think we're in a massive bear market in bonds for the next, at least decade. Scott 49-140, what are the reserve ratios in the UK? I think they're zero, maybe a little higher than the US, but they're zero. In China, I noticed that they're about 6 or 7%. So the Chinese banking sector is not as stretched as the American banking sector. Yeah, Alan Greenspan. I think Alan Greenspan is still a gold bug. Calder Park Zoo says, I went shopping with my two daughters yesterday. People were walking about with faces like, well slapped. Ours is so sad. Times are changing. Yeah, I mean, I think it's good to switch off. And my wife and I switched off like television back in 2015. Yeah, sometimes when we watch some YouTube channels, they show clips, but I think all the bombardment on television, on newspapers, mainstream, will make you like that. And I think you need to focus on yourself and what you do, and your family, community. Be nice to everyone, I think, and try to wake people up. I mean, that's what I've been trying to do. Will bullion dealers accept CBDC? Well, if we have CBDC, yeah, of course. If they force CBDC on the public, bullion dealers will have to deal in CBDC. LG is buying treasuries via his broker account. That's fine. And Andy Brown, with the West in recession and the global de-dollarization, what impact do you think there will be on gold and silver prices and the gold-silver ratio? Well, in the short term, it's difficult to say, but de-dollarization will make the dollar weaker. So the flip side of that is a stronger gold and silver price. So not just in dollars, but also in other currencies. I don't see things changing. The central bankers, they're between a rock and a hard place. If they try to, well, they're trying to contain inflation, and they look at inflation the wrong way. They look at CPI. They don't look at the creation of currency and credit. And if you look at this year, we are up to 307 trillion, the world, in debt. It's increased by 10 trillion already this year, I think, in the first 6 months. And what does that mean? That means that they're still inflating. So yeah, they got no choice. And if they don't inflate and they let everything collapse, you're going to see a lot of bankruptcies. And I think we could see bankruptcies if the bond markets continue to drop, and a lot of counterparty risk. And that's why, yeah, gold and silver outside the system, I still haven't changed my mind about it. Michael Otto, I hope you canceled your TV license. Well, I don't need a TV license because I don't have a TV. I don't watch TV. Haven't paid it since 2015. Choppy Top says no shutdown means stock will rocket. I'm not so sure. I'm not so sure. I saw the news about the US government shutdown. I'm not really, I mean, I saw a senator saying that they want to spend another 100 billion, not what they've spent already on Ukraine. I mean, yeah, the debt is getting silly. The deficit spending is getting silly. Maybe the stock market will go up, but I'm not too sure. I think we need to keep an eye on the bond yield, on the 10-year and the 30-year yield. What is a TV license? Well, in the UK, you have to pay, if you haven't watched TV, they force you to pay a TV license to fund the BBC. So there you go. The British Brainwashing Corporation. When will inversion go away? Well, I spoke about that this past week. It started, it bottomed, the inversion bottom in July this year. And in the last 4 times that the yield curve inverted in the last 30 years, it took 3 times, it took 4 months to get back to zero. And 1 time it took 9 months to get back to zero. So start in July. I would say it's possible that it happens by November. And if it doesn't, it could happen early next year. So it's not going to be long. Scott 49 140. Yeah, I noticed they've changed the US stat clock. To be honest, I don't really look at those GDP to gold ratio. I think those are a waste of time. The only thing I really look at in that clock is the debt itself, the GDP and the debt to GDP and the unfunded liabilities. I ignore those gold ratios. Mr. Ryan 83, is Mario still pushing Glint? Well, yeah, I still have a referral rate for Glint. It's Mario Glint 79. I mean, a lot of people like to have the option of having the Glint app. And basically, what it allows you to own allocated gold in a private vault in Switzerland, a Brinks vault, and you can, and through a MasterCard, not in every country, but in the US and the UK, you can spend your gold on a MasterCard. Yeah, I know it's not for everyone. I personally prefer having the real thing. I do have a Glint card. And yeah, I've been affiliated with them. They approached me back in 2018. So yeah, I still have the details of how to open a Glint account below in the description of all my new videos, all my videos. How high do I think the price of oil could go? Yeah, I think it could, the technical picture, I've been talking about it like for the last few months. We broke like a falling wedge. We could go retest like 130 or even 150 next year. I wouldn't be surprised. Jeff McCarthy says he has a Glint card. Full of Hope says Glint has its place. Yeah, I think so too. And yeah, it's a way of, because some people say, oh, you can't buy things with gold, but with Glint you can. You can buy something for as little as 1 cent, if there's anything that's worth a cent of gold. So there you go. Of course, there is counterparty risk, even though your gold is allocated in a vault. Nothing, there's always a risk. And that's what, that's what I tell people. I'm not saying it's perfect. Over here, what do you think Amazon being looked at for antitrust violations? Yeah, I saw that. And to be honest, yeah, it's probably, it's a little late, I think, for that. It's strange because Amazon, they've been around since the 90s, and they didn't make money for 20 years, but they got funding for some reason. But no, I'm not surprised. But well, it's not something, I follow more things like macro, like the economy and the sectors. Amazon is not something I follow too much, but we'll see. Could they break Amazon up? Maybe. George Assad says, sell everything you don't need, cancel all subscriptions, tighten your belt. It's going to be a rough ride. Most people will lose everything. Uh, what do I think about that? Well, I think I'm not saying, you're wrong, but you also have to keep living. And yeah, if you're, whatever you do, however you whichever way you earn your living, I think there will be opportunities even in a crisis. So um, yeah, but yeah, you need to be careful. One thing that I've always said, that I think is important is to try to get out of debt as much as possible. And I know the debt can be inflated away and probably will be inflated away. But the problem is, um, will you be able to service the debt in the meantime? That's the only problem. And I think having peace of mind is really important. So if you have no debt or you're trying to pay off your debt and you're not beholden to anyone, you sleep much sounder at night. Echo, do you think they will force pension funds to invest more in the riskier growth stocks to take the UK more to make the UK a more attractive place for companies like ARM to list? Yeah, I did read something like that. They're pushing that. Not a huge part of pensions. They're not like forcing them there, but they're like, trying to tell them to do it. And it won't end well, because whenever government tells people what to do, it's always the wrong thing. Just like, they've been telling people pension funds and like local authorities and investment managers put money in government bonds, or government pensions, they're going to be decimated. So anything the government says, I do the opposite. Philadelphia has had looting for a few days. Yeah, it's not only a problem in the US. I think I had an article here that I wanted to share. Yeah, it's happening here too. I'll share this. UK retailers demand protection from shoplifting surge. Employers say violence and abuse of staff is on the rise and call on the police to prioritize response. Yeah, I think this is a symptom of what's going on. Everything's collapsing around us. The economy, the monetary system, the government, debt. And I think that's why they keep pushing this Ukraine war. I just saw that the UK, they're going to send maybe even troops now, or like they call them advisors to the Ukraine. They're really doubling up. And why do I think they're doing that? Well, because we got so many problems uh, like this, and a lot of the retailers are small businesses. I know Primark is a big one, but I think it could be to discourage, to bring them down, the retailers. And so who's that going to benefit? Well, the online companies like Amazon, to be honest. And you have to kind of wonder if there's you know, um, a policy, deliberate policy. But yeah, and I think unfortunately, when government gets too big and they've got too many costs and they're spending money in the wrong places, they don't have enough money to administer the rule of law. So, and yeah, it's not just in Philadelphia, it's here too. A Brazilianaire says, "Don't shoplift from Primark." Yeah, I mean, um, if you were going to shoplift, yeah, Primark wouldn't be uh, a place that you'd think you'd get value for money, or not money in this case. Hannah says, are you surprised that not more people seem to have woken up to the real inflation, currency devaluation, etc.? I am. My sisters and friends and neighbors don't seem to be concerned. Well, the thing is, there's that comment that Keynes made about Lenin, that Lenin said that inflation is a process that is like insidious, and that not one, only about 1 in a million, not even 1 in a million person knows the process. And why is that? Well, because they have to hide it, because inflation is theft. And the people performing the inflation is the government and the central bank and the banking sector. And they have to like deceive people and say that inflation is caused by higher oil prices, or inflation went up because people went on strike and asked for pay rises, or inflation is, so. And most people, they trust what the government and the central bankers tell them. So yeah, and that's why I think, yeah, one day they will probably wake up and realize that their money is becoming worth less and less. Most people think inflation is prices going up, but it's actually the currency going down in value, because they create so much of it out of thin air. And what does that do? Well, it's like if I was able to just print a million pounds, and I was given the right to do that, I'd go out and buy loads of stuff eventually, and if no one else could do it, the shops would, they would raise the prices for me, because they know I have all this currency, and it's the same thing. So yeah, but I'm not surprised, that the majority of people still don't get inflation. But one day, then when they wake up and they realize it's not going to stop, then you could have a flight away from the currency. And what does that mean? Well, it means people, when they get paid and the first thing they'll do is get rid of it to get something before the price goes up. And then you get into the hyperinflation. But you see, they're trying to manage people's psychology by saying, oh, we think the CPI is going to get down to 2% by next year, even though they actually tinker with the CPI, and even though CPI is not really inflation. So it's sad, but if you're stealing, if you're a thief or a burglar, yeah, you try to hide, and you should try to do things in the dark so you don't get caught. And that's what inflation is. Hi, Echo Echo. Echo Echo is asking whether gold investors still have their special deal. Yeah, actually, Oliver contacted me, I think it was yesterday or Friday, and he said, yes, they still have 5% off on various dates sovereigns. And you have to use the promo code Maneco64SOV. So I'll write it here. And I actually bought some sovereigns from Oliver using my promo code, because I thought it was a good deal last week. So yeah, Maneco64SOV. And these are just for the various dates sovereigns. So like the it's not for the 2023 ones, but the older ones. And I received them. Actually, I was supposed to receive them yesterday, and the courier, my wife was at home, and they didn't deliver it here, so I had to go pick it up today at Argos at the Sainsbury's. But it was there; it was fine. Urban Sombrero says, when gold is freed, its price will be unimaginable. But the thing is, you need to think of gold and silver eventually uh, of how much they will purchase, goods and services, because I think our currencies, they're going to be so worthless that it won't mean much. It's like in Venezuela. The dates, actually, I got a Victoria, like 1860s, and I think I got a early 1900s sovereign. So yeah, they're early dates, but they're all good. And says a Wells Fargo executive has jumped from the 14th floor in Delaware. Chris Conman, thank you for your super chat. When the new currency is finally issued to replace the US dollar, what will happen to the existing inflation? Will it reset back to zero upon the release of the new fiat? Usually it does. That's what's happened in countries like Brazil and Argentina. And I think, Clive Thompson's talked about that. I've had him on, of course, a lot of times. And basically, what they can do is they'll keep the old currency, let's say the old dollars, but they'll put a limit on how much they'll basically freeze everything, and then they'll bring in the new currency, and you can only spend the new currency. So yeah, basically they default, and then they can start inflating again. Yeah, government issued currencies, Chris, I'm afraid to say they always they start at 100 at par. They always go to zero. It's never different, unfortunately. But yeah, it will probably help the economy, because a lot of people will, be lumbered with debt. But it will also hurt a lot of people, because it will hurt all the people that are holding fiat currency, dollars, or even government bonds, because they're not going to be worth anything, and you're going to get a fraction of the new currency, which, yeah, you're going to be ripped off. Over here, Mrs. Yeah, pre-2020 period. Well, yeah, we do. Well, I miss pre-2001, where, it wasn't like so stressful to fly, all the security stuff. Yeah, but it's the way things are. Mark Stasiak, the Coinex was the Biltmore Hotel. It's St. James's Square, I think. The Biltmore. What's the address? Grosvenor Square. I'm sorry. Yeah, Grosvenor Square. Yeah. Mr. Bozilla asks, have you read any literature on metho bills? I've read about Hjalmar Schacht. They called him Hitler's banker. The metho bills, I'm not too familiar with. Yeah, he was a very good friend of the governor of the Bank of England, Montague Norman. And it's funny. Well, not funny. It just shows you how it's all like theater, because the Reichsbank, they dealt with the Bank of England, they dealt with the Bank of France, the Fed, all through the BIS, all throughout World War II. So we're supposed to be fighting the Germans, the Allies versus the Germans, and yet the bankers, they're all still dealing and making money, and the West helped finance Germany during World War II. the central bankers. And the Norwegian delegation to Bretton Woods, they wanted to abolish the BIS because they saw this. And then guess who stopped that? Who blocked the BIS from being, dissolved or abolished? Well, it was John Maynard Keynes. It was the British delegation. It's crazy. It's crazy. Scott 49-140, do you think even in a reset, the new currency could be CBDC? Well, that's what they're gunning for, CBDC. The other thing I would say, a reset is a correction. And I think we've been having a reset, ever since 1971. And you just have to look at the price of the dollar, the pound, all the other fiat currencies versus gold. They've gone down. I think what people mean by the reset is like the final, capitulation of these fiat currencies. Yes, they're going to push for the CBDC. I'm not sure they'll succeed. I hope they don't. Boris Perez says, keep your gold and silver as long as you can and spend cash. That's right. It's yeah, because that's Gresham's law, right? You spend the bad money first, yeah, and keep the good one. Yes, Mr. Bozilla, Hamar Shart was, he was one of the founders of the BIS, because the BIS, Bank for International Settlements, it was created to help settle the war reparations from World War I, and Germany was a big part of that. WM, I agree with you. WM says you need to learn to be a producer. You need to make something of value. That's the best way to survive a collapse. Well, it's not even, you have to add value to the marketplace. You have to find your niche and stick with it. And you have to be disciplined. You have to do it regularly. And that's what you got to do. Would Glint be a way around the CBDC? Well, they, right now with Glint, you can either have gold, right, in your account. You can have euros, dollars and pounds. So if they brought in CBDCs, Glint might actually have a CBDC as one of the currencies. So you could still buy gold with the CBDC. We'll have to see if they allow for that. I'm not sure they wouldn't allow people to buy gold or silver with CBDC. And why do I think that? Or sell gold for CBDC? Because I don't think many people have gold. Very few people even, I think less than 1% of investable assets are in gold. We got about 7 minutes to go. So if you got more questions, keep asking. Greg Austin says money is valued in ounces or grams or grains. Money is a weight. It's a commodity. I agree. How is the UK economy doing now? Slava Key asks. It's not doing well. The GDP is barely positive, and it's all tinkered with. I saw a survey that the majority of people in the UK now, they want more government, more regulation, more socialism. But does it mean that I'm going to leave? Not really, because everywhere else it's pretty much the same. I just think you need to know what's going on. And I would say, like the Chinese say, well, the Chinese word for crisis is also opportunity. So yeah, no, it's not getting better. And if labor win, I don't think it's going to get better either. If anything, it could get worse. But I'm not saying the present government is any good. Yeah, I see very few people talking about cutting the size of government um, anywhere around the world. And I think that's what needs to be done. Jay Jones, can you explain plunge protection team and the Fed and BlackRock? What's really going on there? Well, the plunge protection team or PPT is it's like a nickname for the working group, the president's working group on financial markets. And that was created in the aftermath of the 1987 Black Monday stock market crash. The Dow dropped 20%. And they decided to form this PPT, which is the Treasury, the Fed, the CFTC, the SEC, all the regulators. And whenever the markets get unhinged, they intervene, and they use the Exchange Stabilization Fund, which is run by the president and the secretary of the Treasury. The Exchange Stabilization Fund was created through theft. Well, I think it's theft. Back in 1933, they confiscated people's gold, and then through the Federal Reserve Bank, and they gave it to the Treasury. And then the Treasury took that gold. It was worth $20.67 an ounce. They gave people the paper money for that. And then in early 1934, they revalued the price of gold to $35 an ounce. So they made a huge profit. And guess what they did with that profit? They started the Exchange Stabilization Fund. Why did they do that? Well, to manipulate the value of the dollar, to make sure that there is not as much free market. And so that's what the PPT does. And I think it's really bad, because ever since 1987, investors have expected, them to come to the rescue. And that's why we've seen this massive bubble in the stock market and in the bond market. But who knows? Maybe they're going to pull the plug when everyone is expecting them to keep doing the same. The Great Closet. What do you think about the exponential trajectory stock market theory, which predict a final stock market melt up? Yeah, well, I mean, it happened in Weimar, Germany, but the Reichsmark was worthless. So yeah, the stock market, went to infinite levels. So that's possible, especially if the Fed pivots and starts printing again. Even though they keep saying they're going to be tough, they're going to keep rates elevated until next year. But, that could change overnight if there's trouble in the system. Yeah, that's called the crack up boom, which is another word for hyperinflation. It's not that the stock market has value, it's that the currency collapses. But Mr. Bozilla, who needs the Department of Sports? There's a sports minister. What a waste of taxpayer money. We need. I know. If you look at government spending historically, and you can search that on Google, and they'll bring most countries. And in the UK, prior to World War I, government spending was never more than 10% of GDP. In the US, it was around 5% of GDP. Unfortunately, yeah, people have that mentality, but that could very well change, and that's my hope. And how could it change? Well, because if the fiat currencies collapse, they won't be able to do that spending anymore. So it will, if it does happen, when it happens, it will be chaotic, but it will be, it will be a blessing in disguise. It will be like, in the long run, it will be a good thing. Urban sombreros, do dealers sell precious metals in hyperinflation? Yeah, I think they struggle with the pricing because why would they take, sell something valuable for a currency that's worthless? So I think it will be very hard to get gold and silver in a hyperinflation. It will only be after the hyperinflation happens and the dust settles that gold and silver will come back into circulation. I'll take a couple of more questions. It's because it's about time for me to end the live stream. So two more questions. General Stack, Mary, the book, The Great Taking, says the end game is hyperdeflation. Do you agree? Well, partly. I think we could see deflation in financial assets, the value of stocks and bonds collapse. But for basic necessities like commodities and everything we need for everyday life will be, we won't be able to get it. It will be too expensive because, the currency will be worthless, in my opinion. Josh Lineker, quarter ounce or 1 ounce gold coins? Well, the sovereign is about just under a quarter of an ounce. I don't have a problem with any gold is good gold. People talk about fractional gold. I don't even know what they mean by that. I guess anything under an ounce, but that doesn't make any sense. As long as you get the best deal possible, buy a quarter of an ounce or an ounce, or you could buy a 50-gram bar. Mr. Bozilla, they're teaching children at school that cash is dirty. That's the programming of the next generation. Yeah. All right, everyone. So thanks for coming on to the live stream. And if any of you are new to the channel and you enjoy my live streams, or if you've watched some of my videos, make sure to subscribe and hit the little notification bell. So I'm going to wish everyone a very good, very good week. It's the 1st of October. And let's see what happens. And I'll talk to you tomorrow. Take care.